Let's speak now to Ahmad Assiri in Melbourne. He's a research strategist at forex broker Pepperstone. Welcome back to the programme, Ahmed. Now, US inflation came in line with expectations, but prices still remain high. What does this mean for the Federal Reserve's next move on interest rates?
Good morning. Thank you for having me. Indeed, the numbers came in well with expectations, which is good for the markets short term. However, if we look to it from a bigger angle, a bigger picture, we will see 2.5 at the core inflation is still well above the Fed target around 2%. That's even before factoring in the inflation pressure from oil and energy-related product and the impact of the geopolitical development in the Middle East. When we factor that in, we take the inflation figure up to 3.4%, which is with the market expectation. However, it is still high by all means, and it's actually continuing the trend that we've seen over the past 5 years, where the inflation figure and CPI specifically is still well above the Fed inflation target. Kevin Warsh, however, is looking at inflation as a must be well below the 2% average as stated. However, his last appearance seemed to be a bit less strict when it comes to inflation. The interpretation of the market, according to what the figure yesterday, it is expectations of tightening next month FOMC to approximately 1/3 now, up from down from 50% expectation. So this, in fact, really is expectations for a hike on the short term, which supported the gold and also equities grinding a bit higher above the 7,700 figure. So that the interpretation of the market.
Meanwhile, producer prices, which are a gauge of what wholesalers pay for raw goods and materials, is also set for release later in the day. What will markets be looking for in PPI data?
Ideally, further confirmation inflation is under control and heading in the right direction. As the PPI actually measure the first impact on businesses, so market will be watching for those expected figures, roughly an increase month over month by 0.2%. So that's a slight increase that's the market expect. However, that in the bigger picture actually tells us more about how the businesses and how they handling the pressure they comes to that. Typically that passes through to the consumer or the end user. So the core idea for where the market will be paying attention is the PPI figure for the services, as it takes a bit of attention there, and that will actually be a good positive catalyst for the market if it comes slightly within expectations or even lower.
And looking at energy, with peace talks stalled between the US and Iran, the IEA says the global oil market faces a shortfall of roughly 1.8 million barrels a day this quarter. Is there enough stockpiles to absorb this gap as the summer season comes to an end?
I think in the short term, yes, there is inventories around the world. I would cover that. However, the shock is still remain from the supply side. The demand is still fine and well. However, the supply side, and we know the Strait of Hormuz is practically closed, and the negotiations that is primarily between Iran and Oman seems to be advancing. However, there is no clear breakout or headlines on that front. So we will, oil market is still monitoring this as the main catalyst for the energy market. And as we head into the coming weeks, I think the focus will be on that and the supply coming out of the region. However, in the short term, I think there is enough inventories. However, if it lasts even further in the future, we will see this pressure on oil market, even perhaps trading back to three figures again.
Ahmad Assiri, great to speak to you. Thank you very much for joining us.